All right, I'm going to try recording a live trade here. I've been really enjoying trading these failures, and so I'll most likely talk about it in this video, but this is a live trade of exactly what I'm talking about. So we're in a trading range right now. We're at this new low, first entry short, second entry short's there. But before that, we had a new high with a first entry long, second entry long, closed below EMA, triggered, got people into that trade, and prices are reversing. Now, where are people putting their stops? They're putting their stops one tick below their signal bar where they went long on. Now, with such bearish pressure, where are prices most likely to go? Back to the opposite end of the range here. And as you can see, we got filled for one of our contracts. And as prices continue to push down, if you had a runner, you'd put your runner at the bottom of this channel and you catch that additional, you catch that additional money that you have. So that's a very simple trade. I'm working with the strategy of trying to trade two contracts, one for a scalp and then one for a runner, and I'm going to put the runner wherever that swing is. So I just put that runner kind of low at the bottom of the range. Now I think I might have gotten stopped out on that one. I need to double check because it was working kind of fast while I was talking, but that's okay because the one contract you get out and then the other one you would get out for break even. But anyway, that's the trade. And I think this video will be a compilation of live trades like that. So we'll see how it goes. There were plenty of additional failures that could have been taken throughout the morning. Like this is a prime example where you have this new high. So prices are trending down, right? Pre-market hours, prices are trending down. Prices are holding below 200 EMA. You have an uptrend that plays out. So most likely prices are looking to push to go short. We have a new high with a first entry long, second entry long triggers, but the second entry long triggers, the bar closes below the EMA. So this is not a place you should be looking to take a second entry long. But a lot of retail traders don't know that. They'll take that long and then prices will reverse. Now, if you enter long, where are you going to be putting your stops? One tick below this signal bar. So if you put your limit order one tick below that where people have their stops, prices are going to reverse and they're going to push down. The momentum's going to carry. You're going to get out for that scalp. The same thing happens over here. So prices continue to chop along up and down above EMA. You get a second entry long here that's a little bit risky, but you could take it. You might catch a runner. But as this is moving up, what do you have? You have a new low with the first entry short. Prices come up all the way this high, second entry short, and look how far you are from EMA. Prices had pushed up heavily. You're not looking to go second entry short here at the top of the move. You don't want to try and pick tops. So the alternative is you wait for a second entry short to trigger and you put stop limit order one tick above the signal bar where people try going short. Why are you putting that stop right there? Because that's where people are putting their stops. For people that are trying to go short, they're putting their stops one tick above the signal bar. So in case they're wrong, they're going to get out of their trade. And they are going to be wrong because you're not trying to pick a top and trying to go short all the way back to the EMA this high. So what you do is you put your stop limit order one tick above the signal bar, and then as prices come back up and reverse, you get into that trade and out for a scalp. If you enter at 3.25, prices move all the way up to 5.50. That's a 9 tick move right there before prices reverse and push strongly below EMA. So now after prices tried pushing strongly above EMA, trying to make it to the opposite end of the range, we couldn't quite do it. Prices pushed back below EMA. What's that telling us? That we're most likely going to push down to the opposite end of this trading range. And if I back up for just a second here, this is kind of what you're looking at, right? If we're doing a bar by bar analysis, you have prices push strongly above EMA, looking for prices to reach the top of the trading range. We don't get that. Prices are starting to push strongly below this EMA. Then when prices push strongly all the way below EMA, what do you have here? You have this new high all the way up here. Prices come all the way down. First entry long, second entry long. Guarantee people are going to try going long, trying to pick the bottom of the move that happens in a strong trend. Look how strongly prices push below EMA. So what are we going to do with this strategy? What we're going to do is wait for them to enter second entry long, which they do. So there are people that are in this trade trying to go long, picking the bottom of the move, which again, when you think about it, the context makes sense. You're trying to buy at the lows, you're trying to sell at the highs, but this is just not the place you're trying to buy. You would want to wait for high or low with room back to the EMA. You need some sort of confirmation. What we're going to do instead is as people are trying to go long, so people are in this trade, where are people putting their stops one tick below their signal bar? Their signal bar is this bearish bar. Not the best signal bar to go long on, but that's okay. What we're going to do is enter our stop limit one tick below that, and as prices come back down with this bar, you're in this trade. So this second entry long has failed. It's not coming back up to the EMA. You're in a strong downtrend. What we're going to do is ride that momentum. So you enter for, you have a scalp, you have a runner, whatever your strategy specifically is, but you're in this trade, you're out for a scalp at the very least. And this really happens like crazy. So we have a second entry long that's potentially going to form here, right? We have a new high. First entry long prices are coming down. Second entry long, there's a second entry long trigger, outside bar reversal. We don't want to trade those. This is like neutrality. It's a pause in the market where we don't want to trade any of that. But then as prices continue down, we have a new high with the first entry long prices are coming down. This could be, you have to make sure that the second entry long triggers before you put your stop one tick below the signal bar. So with this bar, you never had a tick higher. So don't enter early. You want to make sure you get confirmation that prices activate, that people get into that second entry long before prices push down. Because if you try entering early, you put your tick one tick below the signal bar, it never actually triggers and you're going to get stopped out. So you don't want that. Wait for the trigger, wait for people to get into that trade, and then you can put your stop limit order one tick below. Now, as we look at what prices are doing right now live, we have a new low first entry short, second entry short. It would have been great if we had a trigger below the signal bar, but people are not trying to go short, so there was never a trigger. If we kind of zoom in just a little bit, you'll see no tick. There's a second entry short that triggers. So some people are in that short thinking they're going to go back to the opposite end of this trading range. What we could do, add our stop buy orders, our buy limit orders, one tick where their stops are. Now, if prices move too far, this idea goes away. But on the off chance that prices don't go the way that they want to, prices are going to reverse. Where are people putting their stops? One tick above where we have our buy limit, our stop limit orders right here. And as prices reverse, it's going to stop people out of their trade. Prices are going to push up. Look at that. I mean, a scalp and runner. This is with my eval account. I don't know if you guys can see. This is my live eval account that I'm working with. I'm getting the actual fills, and that's live trading. Pure analysis that's in the moment. Like the strategy works and I love it. This one was a kind of an iffy one here. You have a new low here, first entry short, second entry short that triggers below this bar. What the reason that I like this trade was because we had a new high with the okay, so let's break it down for a little bit. So we're in this trading range. Prices are working down. We have a break of this channel and we're looking to make a new low, right? We have prices push strongly below EMA, spike, and a channel working down with the break of this channel looking for the new low. We have prices that push above EMA, new high, first entry long, second entry long if there's a trigger above this bearish signal bar. When that triggers, you see prices tick one tick above, get people into that trade trying to go long. We're going to help people out of that trade. And how are we going to do that? By putting our stop limit order where they're going to put their stops. So people that are trying to go long are going to put their stops either one tick below this signal bar. Some people might put their stops one tick below the swing here. But if that trade is going to fail, you see this bar specifically finishes somewhat bearish. You could potentially enter one tick below this bar right here. And then as prices work, you're in this trade if you enter here. You push down and get the scalp on this trade here. But if you enter your stop one tick below this signal bar where their stops might be, prices push down. It looks like they come up slightly and then push to the opposite end of this trading range. So it depends on where you put your stop. That's one thing you have to be very careful of. If you put your stop limit order to enter this trade one tick below this signal bar, where are you entering? At 9.25. Prices come all the way down to, where is this? 8.5. So that's 3 ticks before prices reverse. And let's see how high they come up. It comes up 2.25 points. So again, depending on where you put your stop, you have to be careful because if you have a stop, the static stop of 8 ticks, you're going to get stopped out and then prices are going to go exactly where you want them to go. Now the ATR today is, right now it's showing 3.37. If you multiply that by 3 and convert that to ticks, your stop would actually be around 10 ticks. So your stop would actually be one tick above where prices reversed. So you would have, if you played that right and you had a static stop in accordance with that strategy, you would not have been stopped out of this trade. Prices would have pushed down and you would have gotten out. So even if you are entering on this swing, if you play it right, you would have gotten a scalp and potential runner to the opposite end of this trading range. This strategy works and I love it. I want to continue playing around with it, but it makes a lot of sense to me. We're capitalizing on traders that make mistakes. And there are a lot of traders that make mistakes. All we have to be doing is analyzing the market correctly and making sure our risk management is top notch. Because when you get failures like this, when prices push below, you have so much momentum. You can capitalize on some serious runners. So I really want to continue exploring this strategy because it's also been a lot of fun to trade. It doesn't feel as stressful because when I had my stop limit order one tick above this signal bar, if prices continue reversing down without me, okay, cool, I stay out of the trade. But if prices reverse, that's just one extra thing that's on my side. As prices are reversing, it's just going to generate that momentum. You're going to get that scalp. And I think there was one more trade earlier I wanted to talk about. So with this trade here, first entry long, second entry long that fails, where are you going to enter? You're going to enter one tick below where people have their stops. So don't forget price action still matters. You have this uptrend, short-term trend that's working up with a break, move to a new high. So this uptrend is played out. You're not looking to go long. This new high forms you have a first entry long, second entry long. People are trying to go long. After this move has played out, you got to be waiting for a higher low here. So people make the mistake of trying to go long. And where are they putting their stops? One tick below their signal bar. And then as prices come down and reverse, you get that momentum, you get that push. I mean, this strategy is amazing. And while we didn't have it here before, when you see this trade where we went long here, people are trying to short in the short-term uptrend. There's an uptrend at play here and people are trying to short that. So let's just ease them of their pain, enter on their stops, catch that scalp, and call it a day. But yeah, I really feel the strategy is very easy to understand. It's very fun, to be honest. It just makes a lot of sense. It's not like prices are going to tick one tick below the signal bar here and then immediately reverse. I mean, sure, it could happen, but usually with those stops, it's going to generate a little bit of momentum, and I see it happening so often. But anyway, that's the video for today. I really hope you guys enjoyed it. It was kind of impromptu. I didn't plan on recording a full video, but you just get so passionate about it, you get sucked into it, and I really just wanted to share this with everyone. If you're new to this channel, welcome. Please subscribe. Stick around for a bit. If you enjoyed this video, please like the video. And I'm telling you right now, if you didn't like the video, if you're thinking about disliking this video, you have to go back and rewatch this video. There's a lot of good stuff in here for sure. But I've really gotten a lot of positive feedback on these videos. I appreciate everyone that's watching. I appreciate all the comments and support with all of this. This strategy really changes the game. It can really change your P&L, and I hope you guys utilize it and find it beneficial. Have a fantastic week, and I'll see you next week. Thanks for watching.